Greenwood Stocks coming at you, looking at a few trading ideas. It's a market recap we do on Tuesday and Thursday. So we want to bring you stocks to watch, high stocks, stocks we traded, and just give you a little insight for the rest of the week and what the market conditions are. So we got a few stocks we wanted to talk about. And yeah, what are you looking at?
Hey, what's going on, everybody? One of the first plays that I'm looking at right now that I jumped in today was MKD. And what really brought this stock to my attention is because it established some nice support right around 28 cents. And it's a pattern that I've been trading for a while that we call a first green day. So it established this green candlestick, and it also has above average volume. So those are two strong indicators that really, make me feel confident when I'm jumping in a trade because, strong supports right here. So I'm really not risking a whole lot. So I started scaling into this play today. And something else that I liked about it too is that even though the stock is only 30 cents right now, it has quite a few institutions that are holding, 8 institutions holding, a couple names that I recognize. So that kind of gives me a little bit of confidence that, this stock is somewhat legitimate, and that, other investors will be looking at it as well, and it can make a major move. Yeah, something else that's on my radar as well is EAR. I started scaling into this today as well. It sold off on bad news, but this is one of my favorite patterns, the panic sell, simply because when they sell off like this, the news wasn't that horrible. And throughout the day, it established some support, right around 650-ish. So I went ahead and jumped in via a call option, and I plan on scaling and buying a couple more tomorrow. I'm just looking for the bounce because typically plays like this, it may take a couple of days, but as long as it doesn't go below 633, I feel pretty confident in it. And I mean, the next level of strong resistance is, way up here. So I feel like it can at least, bounce to probably the $9-10 range. So that's kind of how I'm playing it. And something else that I really liked about this too that made me jump in. I'm big on watching institutional ownership because I feel like if institutions are in pretty heavy, then it kind of gives you just a little bit more insurance and a higher probability that there will be a bounce. And as you can see on this particular play, I mean, 111% of the float is held by institutions. 167 institutions are holding. I mean, so that's pretty much what I'm looking at right now. You got anything?
Yeah, so I'm just kind of gonna go over what we talked about, what we trade in the Discord, and then also look at a few upcoming plays, a few sectors that could be continuing to run. So yeah, I will start off by looking at here. So again, we're looking at these plays that are down 70%, etc. When you're trading biotech, you got to realize, listen, it's high risk, high reward. So with it being high risk, high reward, make sure that you are risking what you can afford to lose. I mean, that's just the bottom line. So as you see, there was a huge gap down. They got some bad news, criminal probe. And so, yeah, I mean, now the flip side of that, you can get a discount. So, from $20 to $6, it should bounce. Just like the stock that we are trading at this time from 50 to 12. So again, we got in around 14, now it's 18. We use options to leverage because in this market, the most important thing is you have to take advantage of smaller moves because you just never know what's going to move and what's going to have follow through. These stocks don't have follow through. Nothing is following through. That I can name a few stocks from the top of my head that's falling through. So you're going to have to be able to take advantage of small moves and leverage. So the way that I leverage is options. SOFI, we had $14 open up 2 days ago, 2 trading days ago, and it went to 17. Now, when it went to $17 from 14, the call options went from being 10 cents a call on the weeklies to 90 cents. So that's 800%. So if you are looking for a big move with a follow through, you can pretty much forget about it. Some stocks have ran, but however, if you can leverage some kind of way with options or take small profits, and which is going to require you to have a higher win percentage, then you can win like that. So just a couple more. RWLK, we saw this perk up, the biggest volume day ever, 320 million shares. I like this pattern. I jumped the gun just a little bit because I normally want to see it break above the previous high on the biggest volume day. So we should have been in around 260, but who's counting? So we're looking for that to possibly continue. If it breaks 260, we will 90% for sure see a move that can at least carry it to next resistance, which is $5, $4, somewhere around there. And then we have ACY. ACY just keeps running. I mean, this just shows you the possibility of the stock market. Really, again, we talk about long-term resistance levels. And again, you see these levels that are there for months or years sometimes. And then when they break, that's a confirmation of a true breakout. So you see it break and pull back under, break and pull back under, break and pull back over. When it breaks and finally pulls under to where you can see it bounce against the previous resistance, and then you see it run up, the sky's the limit, and you see the volume. So the best thing is when these stocks run on high volume. The second best thing is when they run on low volume. So whenever you see it, go ahead.
I'm gonna chime in real quick too. What I've learned over the years is that you, like, especially stocks like ACY that have a lot of momentum that are running, you have to embrace the pullbacks. Like, you can't let the pullback scare you. That's when you want to be a buyer. Most people, I know it's counterintuitive, they want to buy it while it's going up. But what happens when you do that is you get caught at the top, and then it'll go against you, and then you're sitting in the negative, and then you either get stopped out or you want to sell. You got to really, really embrace those pullbacks, and you want to be a buyer on down days. And if you're gonna sell, try your best to be a seller on up days.
And so we have the next stock I want to talk about is BlackBerry. BlackBerry, again, starting to trend. I'm looking at trend. About 75% of what I do, or around that, is looking at past trends. So I noticed when BlackBerry starts to heat up, it never really stops until it runs a lot. So I'm looking at that. We see 24 million shares once, and it had a pretty big spike, pretty big pop. So we'll see if there's some continuation. But again, if you're leveraging with options, I'll show you the options chain. If you're leveraging with options, and I'm going to do an options course as well, the delta is going to determine how fast these stocks increase in value. So you look at the delta, you look at the gamma, how fast the rate of increase is, and then you can kind of see how much earning potential you have. So again, these weeklies, October 1st, you see $14 calls are 8 cents. And so these are about $4 out of the money. So if you go back $4 all the way to 10, you can pretty much see how much your calls are going to be worth if they get in the money. So $10 in the money, $14 out of the money. So basically, and this is just a trick, I taught myself, 8 cents is going to be 86 cents. So basically, you're going to get around 700 to 800% return if these calls go in the money. So if it hits $14, you can take basically $100 and turn it to 700. You can take 1,000, turn it into 7,000, 10,000, turn it into 70,000, whatever you trade. So again, it's just a great way to leverage and pay yourself if you're right. So again, you see it warming up. The last time we did 20 to 30 million, we went from $8 all the way up to $20. That would probably give you 8, 16, probably give you a 4,000% return if that happened again. So again, you don't need to get greedy. Make sure you're taking risk off the table and taking profits, and you can have some decent gains. So RNAZ, another good call by one of our Discord members. We are looking at a $2 move to a $5.50 move. Again, you gotta take profits. It pulled back super hard. So, you know, you definitely into the close is where you can really get chopped up. If a stock isn't gaining strength into the close, you definitely want to set stops. So, you know, for me, the support would be somewhere between 5 and 450. If not, I'm just out of the trade, because it could continue. But again, I'm looking at about 80% of these stocks not continuing. I mean, we see what happened. EDAP, I think that was it. Oh, no, that wasn't it. I forgot what the stock was. But, you know, either way, most of these stocks are not continuing. They're not continuing to run whenever they do 20, 30, 40%. We look for multi-day runners. It's just not happening in this market. So again, you know, it's going to be the exception rather than the standard. So, you know, SLI, definitely looking at this one. I didn't jump the gun. Once it breaks this level, once it breaks into this $9 level, then I'll think about getting in, because again, you want a confirmed breakout where you're not worried about a big pullback. So, you know, just like ACY, this level here at 37 pretty much confirmed the breakout with no volume, by the way. After it broke, it didn't pull back under this trend line. Then you can see how it just continued to take off. And if you're playing calls right here, you know, you're easily going to get 1,000%. So what else is trending? I think LCID was trending some. Again, it's just no follow through. You're getting a pop. You really should have been in here for sure with options. 16 all the way to almost 30. That could easily give you 2,000 to 3,000%. But again, a lot of these stocks are bouncing one day and then they're pulling right back. So you just never know. We do see the volume increasing eventually, and now.
And I want to chime in too, and that's the beautiful thing about the panic sell, because right there where you see a gap down, if there's no logical reason, you want to be, if it makes sense, you definitely want to look at buying at that level, because I mean you see the follow through and then the run. So
right, and just point out, these are not guaranteed. You know, FBRX, you know, it gaps down 80%. $5 and now you're down to $3.30. So just realize that this is not a guarantee. This is something that you can look at to possibly be able to get a nice bounce and make money.
And it's high probability, be like you said, no guarantee at all. So you definitely want to be managing your risk, but you just have a high probability if it's a decent company, if you can get in on the panic sale, just because it could be considered a discount.
So yeah, just make sure, like I said, just treat it like any other trade. If you get a gap down, again, it can gap down again. Look at AEI. So I just want to give you the good, the bad, and the ugly, from 7 to 4, you know, to 3 to 1 to 2 to 1. So, you know, you just realize you need to see some kind of support. And with these biotechs, it doesn't matter what Furu or Guru is pumping these stocks, the uncertainty will always be there. Even if you think they're the best breakthrough company with the best breakthrough product is the stock that you're holding. Remember, always, you don't want to really hold through data unless it's an amount that you can risk. So again, just make sure that you are playing these things safe, especially when it comes to biotech.
Yeah, definitely trading what you see as well. I mean, you can have people calling stocks all day, but if if you don't see a pattern that logically makes sense to you, you probably want to stay away. Never go in based on what somebody else says.
Right. So with neon, we were looking at this. You see a nice double bottom, and from that point, it runs. I'm trying to get in on here, but again, a lot of times on these bottoms, it's a dead cat bounce, and they're not taking off. So for every chart that I show you like this, there's 10, 15, 20 that look like they have a really good chance, and they just really go nowhere. So again, like I said, we just want to be 100% real with you, transparent, that, you know, you have to really be selective in a market like this. A few months back, the beginning of the year, you know, everything was running, everything followed through, everything ran. After hours, it gapped up. Next day, running, everybody's making money, everybody's a pro, you know. And then, you know, fast forward, and then you get these kind of markets where, you know, the indices are running. The SPY is at all-time highs, which I had some 460 calls they would have printed. But again, you know, you're getting a nice bounce, but you got, you know, a lot of situations where, you know, just stocks just aren't bouncing. So if you decide to play, make sure that you're getting quality setups, make sure that you are definitely taking risk out, taking as much risk off the table as you can, and you can be safely in these plays instead of hoping and wishing and trying to, you know, hit home runs, or really just gambling, because, you know, at that point, that's what it is. CYTO, it used to be EARS, so it's called All Tomorrow Therapeutics. So again, I always say it normally starts with a pop. So there's a pop, then you can almost bet there somebody knows something. So again, I bought some calls on this one. They have a catalyst in a business update on September 27th on Monday. So again, I'm definitely going to be looking towards that. The last time we got volume was August, the first part of August, and now we get volume again. Not even 1 million shares. So this has a low float. Most low floats don't have options. I did pick up some options. I bought some $5 calls, I believe. So if this stock gets any news, there's supposed to be a nasal spray that prevents all kinds of different things. So you know, they'll probably give an update on this, and protective against viral infection beyond SARS-CoV-2. So again, any kind of news with that headline is going to send the stock. So again, you just got to really make sure you look at the catalyst. What's the catalyst and what's the quality of the catalyst, so that you can better predict the move that's going to be made. So that's pretty much it. That's all I have. I could probably talk about 30 more stocks, but I'll save that. Again, just make sure you're being safe. Be sure you're not getting on the hype. You know, we got Wall Street Bets. We got all of these different companies, and a stock's popularity does not necessarily mean profitability. Okay. Just understand what's trending on Wall Street Bets. A lot of these stocks are going nowhere. They're just being talked about because big money may not be in it. The algorithms have to eventually start buying and kicking in to get on the move and continue the momentum that gets started by some of these meme stocks. So again, you just have to really think outside the box. Don't follow too many people. If I could give the best advice, look at your own scans, do your own research, and then go back and somewhat look at what fits into your trading style, you know, because you're the only person that's trading your money is you. So again, just be sure that you are staying safe, taking profits, and looking at the trend. Try to be forward looking and try to think outside the box and get other ideas that people on social media are not talking about, because those are normally the best stocks that run, the ones that are not crowded trades where you got people shorting, you got people with all kinds of agendas that are trading against you, which is why the stock may or may not go in the direction that you plan. So that's pretty much it. You got anything else?
Yeah, I just kind of reiterate on what you were saying. The biggest thing I think is trading what you see. And if you got a certain pattern or setup that you've had a lot of luck with, you don't have to trade every day. I mean, you can watch the market every day, but you really want to wait on your setup that you know and you understand, to execute a trade, because it more or less puts the odds in your favor when you can kind of pick and choose, especially in this market, and really trade what you see and trade with what you're comfortable with trading.
Yeah, like I said, be comfortable. I mean, the best trades that you're gonna make the most money on are gonna be the easiest trades, a lot of times the most obvious trades. So yeah, just know that success does not mean hard and difficult and lots of effort. A lot of times, just like a golf swing, just like a baseball swing, when you're smooth and it's effortless, the ball just goes further and travels further. The same thing, the best things are, things that come to you, things that are easy, and things that you necessarily didn't have to try and strive and spend a lot of time on. Of course, put the work in, but if a trade's going against you, find the next best trade is the best thing. Don't hope and wish and average down unless you really, really have a good reason to, and you are confident in the long run that what you're doing is gonna pan out, and it still needs to turn around in a relatively timely manner. So hope that helped. Please like, share, subscribe, bell icon button if you want to get notifications. You need lessons, need one-on-one mentorship, give us a shout, shoot us an email, greenwoodstocktrading@gmail.com. You can also visit the website, www.greenwoodstocktrading.com, and we will see you on the green side. God bless. I think you may have to, dang, did we not record this?
It's a record.
I don't know if it's sharp. I mean, I hit record.
And it said recording.
Yeah, you may have to try to, you can
It
try to
says, yes, it said,
stop.
okay, it's